And now to our first business story. President John Mahama has assured that his administration will champion policies that will propel the government of the private sector to lead the country's economic development. Speaking at the Independence Square after he was sworn in as Ghana's next president, Mr. Mahama also reiterated that the government's 24-hour economic policy will make agricultural sector an integral part of the country's development.
Hinges on the introduction and implementation of a 24-hour economy. We envisage an innovative and vibrant 24-hour Ghanaian economy, which will also be anchored in agriculture and agribusiness. This innovative approach would unlock potentials that have long remained dormant, enabling us to harness the energy and creativity of all our people. Just imagine a Ghana where our markets are alive and bustling at all hours of the day, with responsive public services accessible at all times, such that businesses can operate flexibly to meet the diverse demands that they are subjected to. And young people, including entrepreneurs, can find opportunities regardless of traditional institutions. The 24-hour economy model will also bolster job creation for the young people, stimulate local industry, and attract foreign investments, and allow us to build resilient communities and a sustainable future. This vision extends beyond mere economic transactions. It symbolizes empowerment, the empowerment of every Ghanaian to contribute to our national progress. My fellow citizens, this vision will allow us to embrace diversity, to cater to varied lifestyles and preferences, and foster a culture of inclusion, ensure that every citizen can enjoy the fruits of his hard work. To the business leaders and entrepreneurs, I invite you to support this new model and join me in shaping a business environment where creativity thrives and where the fruits of your investments contribute to the collective welfare of our nation. Your role in driving our economy forward cannot be overstated. Your innovation and dedication will be a backbone of our success story. And I pledge to you that we would look at the tax regime and rationalize them so that they are more transparent and fair. Members of the business community, I assure you, Ghana is open for business again.
The business community is expecting the John Mahama government to formulate policies aimed at stabilizing the economy and dealing with concerns of public expenditure. This is according to the auditing and professional services firm, KPMG, as the new government takes over. Speaking to Joy Business, senior country partner of KPMG Ghana, Anthony Sapon, underscored the importance of economic stability to investors.
Looking for the leadership of this government to be able to stabilize the economy. It's so essential. If you don't stabilize the economy, then what businesses and individuals will do will not amount to the needed hope that they have placed in this government. And therefore, I would expect that government will look at expenditure management, fiscal discipline, particularly as we are in the regime of IMF program, to make sure that we are living within our means and make sure that expenditure is controlled. Secondly, we need to focus on revenue enhancement and mobilization. We continue to have within our sub-region among the low in terms of tax to GDP ratio, and therefore an expansion or deepening of the tax net. I do recognize the new government has signaled abolishing some of what may call nuisance taxes. But besides that, I believe that there are also good replacement for non-tax revenues that government can really look at, and that will make up some of the mixes. So if government is able to be efficient in tax and other non-tax revenue mobilization, then it will have sufficient funding to be able to implement the policies that it intends to do. And lastly, to keep an eye on our debt management. We need to ensure that our debt management become a focal point of what government will do, and ensure that the journey that we have started, we can bring our debt to GDP ratio down instead of allowing it to go, because if it flip out again, that will be critically a dangerous position for Ghana to be in.
Government will end the first quarter of this year spending 24 billion cedis, more than revenue projected to be mobilized for the period. This was captured in the 2025 mini budget presented to Parliament last Friday. Here's George Wiafe with more.
This is the budget deficit on cash basis that the incoming administration will record at the end of March this year. This is because it is hoping to raise about 42 billion Ghana cedis at the end of the first quarter of this year, compared to 66 billion Ghana cedis that is hoping to spend for the first 3 months of this year. For instance, the development may raise some questions about whether it might be prudent for the incoming administration to go ahead and remove some taxes. For the full year, government may lose more than 6 billion Ghana cedis if it goes ahead to remove the e-levy and the COVID-19 tax. This actually excludes the betting tax and other levies that the incoming administration is trying to remove. Domestic tax will be the highest contributor to total revenue. The first 3 months of this year, bringing in 41 billion Ghana cedis for the first quarter of 2025.
History has been made today. John Mahama has been sworn in again as president of Ghana and has a great task ahead of him when it comes to fixing the economy. He has promised to reset the economy, but where does the reset start from? The former president, Akufo-Addo, painted a good picture on the state of the economy, but that is already being contested by most economists and policymakers. Joining me on Zoom is Associate Professor of Finance at the Andrews University in the USA, Professor Williams Prepara. Welcome, sir.
Sir.
Great. Where does the reset begin from your perspective, looking at the current state of the economy and the outlook of the last 8 years under the former president, Akufo-Addo Akufo-Addo?
Thank you very much, and good evening to your viewers. So, if we listen carefully to the president, he started by talking to us and saying that we have to reset our mindset. Mm-hmm. The mind of the Ghanaian citizen must change, meaning that the way we used to do things in the Akufo-Addo government era, things are going to change. So the mindset has to change. The second part is when it comes to the economy, the president mentioned that his governance is going to be based on 4 main pillars. 2 of them focuses on the economy, economic stability, stabilization, and then opening up Ghana for business. And then the other 2 pillars dwell on constitutional reforms and then also accountability and corruption. So it said clearly that the government is aware that the major challenge that we have is how to make sure that we have a stable economy. And if you ask me as a finance person, a finance professor, the first part I want to be addressed is how we ensure that we have a stable exchange rate regime.
Great. Prof, today we have been reporting that government would end the first quarter of this year spending 24 billion cedis, more than the revenue projected to be mobilized for the period. This is government looking to remove some taxes, and institutions like the Fixed Solutions have warned that this could affect government fiscal consolidation program going forward. How does it look for, especially going into the situation that we are in and resetting the economy?
So remember, this first quarter budget was done by the previous government. So they still did the budget based on their strategy, which is a little bit in line with the IMF program. I'm sure the government in the first quarter will have to review that budget, and they may have to align some of the expenditure items. I'm sure we are still not going to have 120 ministers, so that section of the expenses will have to be relooked at. Also, in terms of, there's one line item that the previous government wanted to make sure that we get revenue from, which they failed, which is the property tax. If the e-levy and COVID taxes are going to be abolished, the alternative for government is to make sure that they ensure that the property tax regime is enhanced. And that one alone, I'm sure there are a lot of studies that have been done that they say that that one alone can give us almost about 2 to 3% of our GDP, revenue to GDP. So that portion will be able to make up for any shortfall that may arise going forward. So the property tax regime must be ensured that comes into force. And to me, when these are done, it's going to be able to ensure that that deficit that we are talking about will be reduced significantly.
Prof, the president also spoke about improving the business environment. What would that basically entail? So
the business environment has suffered from two main angles. One, instability in the exchange rate regime, and two, unfriendly tax administration. We know that the business community, though they complain about the issue of exchange rate, the direct one that they see, that they think that they can manage, is that our tax administration is not friendly enough. So the current government, this government must make sure that the tax policies, as he's talking about tax rationalization, they must make our tax administration very friendly to the business people. And I'm sure the business community, once the tax administration is very friendly, the tax structures have been aligned, and those that has to be removed has been removed. Specifically, for example, VAT, we pay tax on tax. That must be realigned. It shouldn't be in that line. And when you're able to do this, it's going to make sure that the business community will open up and business will flow. And the government wants to focus on the 24-hour economy. This can be achieved when there is the tax environment is very friendly. So for me, the tax administration point must be friendly. The taxman must not be seen as an enemy to businesses, but must be seen to enhance production. And that is the way to go about it.
Prof, on the back of this, the other news is that government will now be targeting to clear 2 payments to investors for the first quarter of this year. This was after it cleared some $346 million to Eurobond holders in a coupon payment just last Friday. How significant is it that the government has paid $346 million to Eurobond holders and is targeting to clear 2 payments in the first quarter of this year?
I mean, this is good news. We may see that straight away the rating agencies are going to change our ratings. Our ratings are going to be improved from the C column, moving up to the B column. So this is good news. The moment the country starts to pay your debts, it changes your credit worthiness. It puts you in a better position. So, and the beauty of this is that in the future, should government want to borrow again, it will lead to a reduction in the interest rate that we will pay. So it is good that we have started making the payment, and we are going to benefit from it when we see that the coupon payments, the interest rate, and other factors are going to come down. The most important thing is, I think I gave a paper and I said that Ghana, which is a fallen angel, will rise again. And I'm sure once we have started making our payments as a fallen angel, you see us rising again. And this has been confirmed. And as we mentioned, you listen to the president of Nigeria also saying that the black star is going to shine and go higher. And the loan repayment is on that line. We are going to see our rating rates going up and then improving.
Honorable Professor William Prepa is finance professor at Andrews University. We appreciate your time here on Business Live. We take a short commercial break. We have more business updates. Stay tuned. Welcome back to Business Live. My name is Winston Taki, and now to more business update. Some commercial banks have expressed optimism of a strong sector despite the change in government. According to Managing Director of Republic Bank, Benjamin Joboku, more effort should be put into reducing risks and improving key areas to support the growth of the local economy. He spoke to Joy Business at the signing of an MOU between Republic Bank PLC and the Development and Investment Bank in Liberia.
Agreement includes providing technical support to the staff of the Liberian Bank of Development and Investment to enhance their skill set. The move will also support the bank to achieve some growth in its mortgage portfolio.
It's a technical service agreement with Liberia Bank of Development and Investment. The purpose of this technical service agreement is to provide technical support to the staff of LBDI. They want to achieve some level of growth in their mortgage. And therefore, Republic Bank Ghana, if it comes to mortgage, we have the expertise.
Speaking on the progress made by the bank, he said the bank will continue on its positive trajectory going into 2025.
I believe by the third month of this year, you see Republic Bank results. I think we had a good year last year, and therefore we expect our results to be great. I believe we'll be hovering over 9.5 billion in total asset, moving from 6 billion last year. We expect our profit to be over 200 million. Starting from 145 million last year. And therefore, we achieved a great result last year. We expect this year, even though we have a new government, we believe that if you have the skill set, no matter how big the economic fundamentals, you need to have the plans to be able to meet the external factors. So far as your internal factors are solid and strong, you don't need to be worried about whatever that will happen in the economy.
President of the Liberian Bank of Development and Investment, Dr. Christian Allison, explained further the rationale behind the partnership.
Well, for the very simple fact that we took over an institution last year, LBDI, that had gone through a series of issues with respect to its performance and its operational issues. We needed to put the bank back on the path of progress. And one of the ways to do it, like the MD just suggested, is to ensure that your internal processes are second to none. And the most effective way of doing that is to ensure that your people have the capacity to deliver. So looking around the sub-region, we engaged with Republic Bank, recognizing their strength in certain key areas that we could benefit from. So we sought this collaboration. We sought the collaboration out, and they were gracious enough to accept it. So we're trying to create a synergy whereby we can tap in on their expertise, on their knowledge, and have that expertise and knowledge transferred to our people so that they can be better able to serve, like he said, our stakeholders. And that's just the basic goal behind this entire thing.
Republic Bank PLC is optimistic to deepen its operations in the micro, small, and medium sectors to support the growth of the local economy.
That's all for business updates here on Business Live. My name is Winston Taki. For more business update, visit myjoyonline.com to get more stories. As you can see, consistent debt repayment to improve Ghana's rating status, default extremely low. Our business policies will foster growth of private sector. That is the current president, John Dramani Mahama, speaking there. Also, the Bank of Ghana injected $2.8 billion into the forest market between August and December 2024. My name is Winston Taki, and let's bring you an update from the international market. Enjoy your evening. Bye-bye.